Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the small caps. Okay, so these are all small caps that were in play today. And so first up we're going to look at ticker symbol HEAR. This stock, has been in this nice uptrend. It did close up 64% today after the big gap up open. As you can see here, it's been riding EMA4 support higher. That's that pink line. Look how it's just been holding that for weeks. Yesterday there was a little shakeout, but it still held that EMA 4 and 8 support level, and then today there was the giant gap up open. Now notice the long upper wick on today's candle. That does show profit taking, possibly some dilution there off of the high. And when you get an indecision candle like this, the best thing to do if you're long is just to head to the sidelines and look for a reload lower. There is a chance that the candles do work their way back into the bands, and so if they do work back into the bands, what you want to see is this EMA 4 at 877 support level hold. Okay, so that's the big level to hold on a pullback. If it gets down to there, you might want to just wait for a gap fill to see the gap fill, and then many times a gap fill is the signal to enter for a reload if support holds. So we'll keep an eye on HEAR. You'll see here on the 15-minute chart, it had all the volume early in the day. There was this big run up on big volume, and then the candles worked their way back into the bands here. And middle Bollinger Band support did break at 145. It did get right back to that middle Bollinger Band level at the close, so it needs to get above 1143. So tomorrow, if it's trading above 1143, that would be bullish, and you'd be looking for a retrace back up to that high close level up there around 1350. Now, if 1143 turns into resistance and you see it drop down here below this, below 11, if it gets down here around 1075 lower, that's going to be a red flag. It needs to really get above that 1150 zone in order to head higher. If it breaks down, the downside risk is it comes down and tests this 50 simple moving average at 951, and then a drop way down here to just under 825 would fill the gap. So that's the when you get a chart set up with this type of candle, it signals more downside risk than upside potential. It's still in a very bullish uptrend. It's just the gaps are scary in penny land because many times they do get filled. Okay, let's look at PERI. This closed up 30% today. This was a really big move. It did form that long upper wick on today's candle, so there was a lot of dilution and profit taking off of high of day. It came up and it hit this resistance zones from back here in October, and so it has to break this 122.5 resistance zone to get up here to that 300-day simple moving average at 128. Tomorrow, if it fails to get above this red line, that's the 200-day simple moving average at 103, that would be a red flag, and you'd likely see the candles work back into the bands. What you want to see is this 100-day simple moving average at 91 hold. Okay, so that's the huge level. If it did pull back, you want to see it bounce off of that, and then so above 91, if it could hold that, that would signal still more upside. And tomorrow, if it gets above a 103, this right around 115, that was this high close here in January. That's going to be a big level to break. This 122.5 level, 129. It needs to hold that 91. If it dropped below 91, it could come down here and test that 50-day simple moving average. There is a gap between high of day yesterday and low of day today, so that is always a risk, having that gap fill at some point in time. Okay, let's look at SDRL. Closed up 17% today. The energy sector has been really good for the small caps, and they keep on having good plays, and so this was good follow through for SDRL today. I'd been working on getting back above this red line, which is the 200-day simple moving average at 28. It formed that black candle yesterday, just gapped up open above it and then pulled back below. All these candles you can see were trying to break that level. There was a close above last week, and then today there was finally a breakout higher. So what you're looking for now is this zone up here. You've got the upper Bollinger Band at 35, and then you've got the two closes here between 36 and 37. Those are going to be the big levels to break. If it can get above this high close here on the 18th of April, that would be signaling that it wants to keep pushing higher. If it comes up here and it hits this 35 to 37 resistance zone and it fails to break resistance, that could signal a temporary top. Okay, let's look at ENPH. So this stock has been doing really well. Congrats to everybody that's trading this. Closed up 11%. It formed the double top here where it formed a top in March, and then it came back and it formed another top, and then it came down and bounced off the 50-day simple simple moving average on the first trading day in May, and then today it came back up testing this double top zone, and it broke out above. So that close above resistance today does signal more upside potential. It needs to stay above this 510 level, whatever this level. What is this like? I guess it's 510. Stay above that. That would be bullish. Basically, this closing price on the 27th of March, and then what you're looking for is a break above 560. That was the high close here on the 27th. So if it can get above that level, that should signal that it wants to break out higher. So yeah, this was a really nice move. You had a giant volume spike. If you look down here on MACD, you've got a MACD bullish crossover on the 12, 26, and 9 yesterday, and so that's signaling the possible start of a new uptrend. There was a MACD bull crossover last week, and then check out today there was a PSAR bull flip. The green dots are now below the candle. SAR stands for stop and reverse. You have RSI up here at 65, which, as you can see back here on this previous big run, RSI was above 70. So there still is a lot of juice in the tank. Look how this thing has a history of being able to push higher. And then if you look up here at Fasto, it's at 86. It just broke above 80. And so sometimes, when it gets above 80, it stays above that level over an extended period of time, and that's what you want to see. Once there's a break above 80, it needs to stay above. If it dropped below, like right here or right here, that's the sell signal. Notice how each drop below Fasto signaled the top. Right? And so if that happens again, if Fasto drops below 80, then you'd be seeing another red candle and a pullback. Okay, so if it stays above 80, you might get this kind of action over here where it keeps pushing higher. Okay, let's look at SN, another small cap energy stock that's rocking it out, and it closed up 13%. RSI is at 58, so there's a lot of juice in the tank. Today it had a bullish move back above that middle Bollinger Band, so it's trying to get a new uptrend going. The middle Bollinger Band support level broke back here in April, and all the candles were forming below, were closing below and forming below until today, and so that close above is signaling more upside potential. Also notice this descending resistance line. There was a close above that level today, so that's also very bullish. There was a gap on the chart between high of day on this candle and low of day on this candle, and so as you can see, the gap did fill today. So the space in between these two candles right here, okay, so the space between those two candles did fill, and so that many times a gap fill will be a climax event. So it has to break above this 370 level to head higher. If it can get above 370 and then get above this 390 and then the 100-day simple moving average at 402 level, that's going to be a signal that wants to head higher. This is going to be a big resistance zone because it has the top here and the top here and the 100-day simple moving average all lined up at the same level. So if it can bust above 4, that should signal it wants to head higher. If it struggles with 4, it might take a pause. The promising thing is look at the volume down here, and you can see they loaded heavy on that dip on Tuesday. So yeah, we'll see if it can get some more steam and keep heading higher. Okay, now let's look over here at MCEP. This is another energy sector stock, closed up 14% today. Notice RSI is at 58, so it has a lot of room to run. Fasto just got above 51, so this chart's just heating up. You can see here plus DI is below 80x. The green line's below the black line. You want to see that green line cross above the black line, similar to back here, where that signaled this nice push that happened. And so basically today, the candles closed back above the middle Bollinger Band, and for the first time since support broke back here in the first week of May, and so it had been working on breaking this dotted purple line, and then today it finally did. Notice that the pink line here is crossing over the green line. You have the EMA4 crossing back over EMA8. There was a close above EMAs 4, 8, and 13. This is everything that you want to see, if you're a bull, and so now it needs to get above this key resistance level here. If it can get above the closing price on the 30th, then you're looking at this 230 close and up here near 250. These are the three big targets to break to the upside. As long as it's holding the middle Bollinger Band at 187, the uptrend's intact and the signals to keep riding. Notice how it bounced nicely down here off this 50 and 100-day simple moving average support zones, so that on good volume. So the key here is it's got the good volume. For a thinly traded stock, it has good volume here, and many times that signals that it wants to push higher. Keep an eye on MACD. You want to see the MACD line cross over the signal line on both time frames. Okay, let's take a look at MOSY. So it closed up 4% today, nearly 5% today, but that's not the story. The story here is the big gap up open after, or the gap up after hour, the after hours push, I guess you should say. It's up here at 235 after hours, okay? And so this circle represents where it closed in after hours trading, and so it can change. Pre-market, it's going to be trading as well, so this target could change. But the big thing is right over here. If you look at June of last year, this high close on this black candle, that's going to be the big level to break. It's not a coincidence that it closed at that level today, because that is the big resistance level. That was the recent high close. The other high close level to break is right here off of this white candle, so just below $2 there in the 190s. That's going to be a big level to hold on a pullback, and you can see this descending resistance line with these two tops, and so 180 is going to be a big level to stay above as well. So tomorrow, if you see it's struggling with this 235 to 240 zone, failed to get above, that would be a signal that it might be a temporary top, and then definitely if it dropped down below 190, that would be a red flag, and it needs to stay above 180. If it got below any of those levels, that would be, if it was a gap up open, that would be a black candle, and so you want to watch out for a black candle, because in our opinion, that signals to head to the sidelines. If you look back here, the last time there was a big gap open was back here in November, and you could see it had closed down here at the bottom of this red candle, and then it opened way up here with the giant gap up open. Notice the long upper wick followed by the big red candle. Okay, so just keep in mind, just of the history of what could happen. I'm not saying that's going to happen, but just keep in mind that has happened in the past. If you look at MOSY weekly chart, you can see here, this kind of smooths out the data and shows you the key levels to break. This is that recent high close I was talking about, and this is the other key level back here in June. And so those will be two big levels to stay above. And so right now, it's needs to break above both those. And then this is the stay above both those levels. And then you have this close back here is where it's hitting resistance from March of 2017. If the big thing on this chart is if it can get above this 240 zone, what you're looking at is the 100-week moving average at 265. That's the gold line there, and so that's going to be the big level. If it's trading pre-market and it's holding that 230, 240 zone, and it starts trading, what you want to see is a push through 265 and then stay above that level. If it comes up and hits 265 and that turns into resistance intraday, that could signal a temporary top. That's always a tough level to break. It's also lined up with a lot of candles here, that were support. There was a lot of trading in this zone. And so that could prove to be a tough level to break. And so we'll see. If it can close above 265, that would signal it wants to head higher. If it comes up there and hits that level, fails to break, it could pull back and just test these other high closes. And you just really want to see it stay above that 240 level. That would be most bullish. Okay, let's look at APVO. Okay, nice move today. Closed up 14%. As you can see on this chart, it closed above high close horizontal resistance today. It closed above the closing price back here in January. That was the recent high close at 475. That was a big level to break. It also closed above the recent high close level, which was this candle right here on the 16th. And so the close above these two white candles is signaling more upside potential. So what you want to see is you want to see it stay above 475. If it pulled below 475, as long as that EMA4 at 457 is holding, the chart is super strong. If you look down here at the volume bar, I mean, this was it's breaking out on the largest volume since back here in January, so that's a really nice move. And notice how MACD is just starting a bullish crossover on both time frames. So this is the potential start of a new uptrend. I mean, look at the last crossovers. I mean, there were crossovers down here, and there was a nice, that did signal the nice uptrend. There was a crossover in the 1226 and 9 right here, and it had a very nice uptrend after that. And then the 813 and 5, the most recent, it did cross over back there, and then it crossed back and then back again. But they both signaled the start of that uptrend. So them crossing over now could signal the start of the next push higher. Okay, so if we look here at the APVO weekly chart, you can see this is the entire history of the stock. It started trading back here in July of 2016, and so it came down, it found support in this 125 zone, and now it's worked its way up. It's filled the jar, and as you can see here, this has a cup and handle vibe going on here. If you look here, you've got the cup, and then you got the handle, And so now you have a breakout above the handle. So you have the handle over here, the high. You know, regardless, this is you know, if this is a cup or handle, regardless, this is just signaling that it is breaking out higher. The key for the week is to close above this candle right here. If it can close above the weekly high close in January, that's going to be super bullish. That January close is the highest close in the history of this stock. Okay, so over here, this is an open. This is an open. The close on these two candles is down here and down here. All right, so this close right here in January is the highest close of the history of the stock. So APVO can close above that level for the week. That should definitely signal more upside potential. That's exactly what you want to see technically. And so what you're looking for now is a run up to $6. That was the opening price. And if it can get above 6, you're looking at this 830 zone, which is the all-time high. And so basically, this could be getting into that you know, blue sky breakout territory. You know, now you're just working on one candle. 1 week of trading on the very first week. You know, that's the only resistance now on the chart above is this one red candle and what happened in that 1 week. You can see that there even, yeah, you know, the interesting thing is this big volume spike is on this candle. And so on that 1 week of trading, look how much volume there was. There was nothing. So that there is this whole candle right here. Look, there was a microscopic amount of trading that week. I don't know if it started on the Friday or what, but look at that little candle or little volume bar. You know, so the bottom line is, you know, maybe what 400,000 shares traded that week or something, 400,000 or 500,000. That's it. That's not going to prove to be a whole lot of resistance. So this is going to heading up to blue sky breakout territory. So we'll keep an eye on APVO and see if it can keep cruising. Okay, take a look at RNN. Closed up 7% here. You know, this had that nice bounce, and so yeah, it pulled back and it bounced off this 200-day simple moving average at 201, and so today it formed a bullish bullish one white soldier reversal pattern, and so that is signaling more upside potential. This closing price here on the 4th is the big level to break. If it can close above that, get above this 220 resistance zone, that should signal it wants to head higher, and then you're looking for it to work back up here into this recent high close zone, okay, which is around 245, and then the 300-day simple moving average at 261. You know, these will be the targets above. If it can get above this 225 level, 245, 261, it has to stay above $2. If it were to drop below that 200-day simple moving average at $2, that would be a red flag. You know, notice how this has been on the strong uptrend. It got above EMAs 4 and 8 here on this candle, and it's just been riding higher. Even on the pullback, it stayed above EMA 8 and was holding EMA 4. So as long as these levels are holding, the signal, if you're a longer term swing trader, is just to keep riding. You know, sometimes the best thing to do is just to keep riding, but that's only if you're on if you've identified the trend correctly. You know, this is an uptrend, so if you're long, the signal's to keep riding. You know, if you were over here and you were wanting to ride, you'd be wanting to ride short because the trend is down. So just saying that you know, if you're trying to be a longer term swing trader, if you can identify the correct trend and it's riding EMAs 4 and 8 support higher and you're long, sometimes the best thing to do is just to keep riding. Okay, so let's look at EYEG. Okay, it closed up 11%. We have RSI at 57, Fasto at 53. Check out how Plus DI is trying to break out here. This is just heating up. You know, this has all the little indicators that it's just getting going. Check out PSAR. SAR stands for stop and reverse, and you have the green dots were above while it was consolidating, and today you had a bull flip. Now, the last time there was a bull flip, it was a head fake. It didn't do much, you know, so you know, we'll see if it can get going. But this was a nice move because it broke above two key levels, that green line and dotted purple line. It got back above the middle Bollinger Band and the 50-day simple moving average and EMA 13. All you know, all these moving averages are all lined up between 49 and 50. And so as long as it stays above that 50 level, that should signal upside potential. It hit the key level to break, which is the closing price on the 23rd. If it can break that, then you're looking at this channel over here. There was a lot of trading in the sideways action. You want to see a break above the top, which will be this candle right here. And then eventually what you're looking for is it works. working its way up to that 100-day simple moving average at 74. If you look over here in February, there's a gap between low of day on this red candle and high of day on this red candle down here, and this was the high close for since it's dropped. You know, this is the highest close, and so that's always a tough level to break. You can see it keeps hitting that level and pulling back, and so basically what you're looking for is a run back up to the bottom of the gap. Now keep in mind, this red line here will be tough to break because anytime you test a bottom of a gap, it's always big resistance. Notice how these candles are failing to break that level. So once it can get above that bottom of the gap level, that's when you start getting what we talk about as a gap fill, and that's when the chart can push higher. The promising thing is look at the volume. I mean, this had really big volume at the bottom, and then today it had a nice little volume spike. And so the key on these kind of penny stocks is you want to be following the volume. You know, if the chart has an uptrend going and volume's coming in, that's what you want to see on the penny stocks. You want to avoid penny stocks that are super thinly traded, or if they're thinly traded, volume jumps in, you want to get out before the volume dries up. That's just the you know, with penny stocks, they become very illiquid when the volume leaves. Okay, let's look at NVCN. It closed up nearly 4% today. So this is a painful chart. And so this is why we say, you know, don't try to, you know, go long and catch a falling knife on these stocks that are riding EMAs 4 and 8 resistance lower, because, you know, you get a short cover rally, you know, you get a bounce, but then it continues, downtrend continues. You get a bounce, downtrend continues. You get a bounce, downtrend continues. You know, people were thinking, oh yeah, this is it, this is it, this is it. Nope. Going down again, and then you got a bounce down here, and then the downtrend continued, and then today, okay, right, like it's working tight. Look at those Bollinger Bands. It got back above the middle Bollinger Band. There was a lot of chatter, you know, people in the chat are like, you know, everybody's like, yeah, NVCN, you know, it's ready, it's ready, it's ready. Everybody's so ready because so many people have been burned so hard on this thing that people just want it to head higher. And then today, what happens after hours? Bad news comes out, of course, and the financials were bad. Bottom line is never hold a penny stock into an earnings report, especially when it's down here at 4 or 5 cents. I mean, it's not going to be good. I mean, they're not going to have anything good to say when the stock has been crushed like this. And so the problem now is this is looking at possible delisting, right? Because it's not going to be able to meet NASDAQ requirements. So this is going to be the OTC version of NVCN real quick here, and yeah, and so bottom line is it's at 4 cents now. That's this close right here in May. If it drops below that, then you're looking at the all-time low close here in April, and then the bottom of this wick here, that's the all-time low for the history of this stock. All right, and so if it breaks below that, it will be making new all-time lows. So you're looking at a gap down, you know, similar to this kind of scenario, and then we'll see what happens. You know, maybe they'll run it, maybe they'll squeeze it. You know, it's tough to say, but it's down 26% in after-hours trading, and that's not what you wanted to see. It had to stay above the middle Bollinger Band at 0.046 in order to head higher, and dropping below that today makes it a risk to hold. This was a risky play regardless, but this is the fundamental type of example of why, you know, I think you're better off, you know, concentrating on this kind of chart where it's in an uptrend. You know what I mean? And concentrating on, you know, stocks like this that are cruising above the middle Bollinger Band, right? Look at here over here. I mean, look at this uptrend. You know what I mean? If you want to go long and you're playing penny stocks, go for the right chart. This is not the chart that you want to go long. This is the chart that you want to be short, you know? And you just want to avoid mainly, you know, because but you can play the bounces and people do good. I mean, there was money that was made down here on this bounce, and that's a good trade. But just know that anytime you have a heavy dilution chart like this, because this is a reflection of their bad financing and the fact that they have to keep dumping shares to pay the bills. And as you can see, the volume that's increasing as it's getting lower is because it takes more shares to convert. You know, like as the share price gets lower, but the bill is still the same, and so they still have to come up with the same amount of money. How do you come up with the same amount of money? You have to sell more shares, and so it just keeps increasing. So as this drops lower, volume can increase because they're liquidating more. And so yeah, so stay away from dilution plays unless you're short. If you're short, these are a freaking dream. You know what I mean? Because they keep going lower because of the bad financing. You know, if you could have shorted up here and just rode it lower, lower, you're rocking it out. And the bottom line is that this is the monthly chart. All right, the history of trading started back here in 2012, and then now you can see last week or this is the monthly chart. Last month it had its all-time low monthly close, and this month people were getting sucked in on this white candle, but you know, now it's looking like red candle, and it's going to be going for a new all-time low. You know, down here at 0.0312, it is the all-time low, and so it's going to be testing those levels tomorrow and later this week likely. And so if it drops below, that's just going to signal continuation of the downtrend. And so, you know, and hey, don't get mad at me. This is just my analysis. It's just my opinion, and you never know. Maybe it'll bounce and run tomorrow. Okay, because dead cats do bounce, but they fall back down to the earth. And talking about dead cats, let's look at this dead cat bounce. BIOAQ. This is what happens. This is what's going to happen to NVCN. This is going to be it right here. See, you're on the NASDAQ. You're freaking trading up here near $1, and then you know the stuff hits the fan, and what happens? You end up on the OTC. These guys were just on the NASDAQ, and they got demoted. And so what happens when you get demoted? You get when you get delisted, they crush you, right? You drop down, and these guys are followed. These guys have been in a downtrend, and then they followed for bankruptcy, I guess, because they have a Q. If you have a Q on the ticker symbol, that means that you're, you know, you filed some sort of bankruptcy. And so the bottom line is it's got the multiple red candles, and this had the dead cat bounce. And so what was the clue that they were loading? What was this lower wick on Tuesday and this big volume bar? And so if you're a bounce player, you know that was a signal that you know, trying to load here and play the dead cat. And so what you want to do if you load it on this lower wick is you want to be a seller right here at EMA4. EMA4 is always the sell zone unless it can close above. Since it didn't close above today, the signal was to head to the sidelines. You can always jump back in tomorrow if it breaks back above EMA4, but holding anything that closes below EMA4 on the daily chart is a risk. It's a risk to hold long. You know, all these candles, when it's heading lower, are closing below that pink line. And today, it hit breaking, especially since it traded above intraday, you know, it needed to close above to head higher. Now tomorrow, if it breaks above 12, that'll be a signal to jump back in for a trade, and then it would have to stay above 12 in order to, you know, 0.12 in order to stay in play. If it stays below 0.12, that's going to be a signal to stay on the sidelines or be short. And who's going to be shorting a penny stock like this? So the bottom line is just be on the sidelines unless it can get above that level. If it gets above that level, EMA 8 at 0.017 will be the next key level to break. If you look here at the 15-minute chart for BIOAQ or BIOAQ, you can see here it actually did close bullish on the 15-minute chart. So if you're not playing the daily chart and you're going to break the EMA4 rule, you know, this would be an example of where you might do it, because it does have still a bullish 15-minute chart. For us, if the candles are forming above the middle Bollinger Band and the 50 simple moving average, on the 15-minute chart, it signals the stock's in play. This is actually still above the 100 simple moving average. So tomorrow, if it can stay above 0.95, 0.095, and 0.086, that would signal, you know, that it's still in play. If you see it drop below 0.086, that's going to be a red flag, and it could drop all the way down to 0.066, the 50 simple moving average. That's the next support level. So, you know, basically, you want to see it hold this 100 simple moving average at 9.5, and then it's the 13 level, 0.13. That was the high close. If it gets above that level, then it could run up into the 2s. You have the 200 and 300 simple moving averages between 2.1 and 2.4. Okay, thanks for viewing this video. If you'd like to learn more about charts and technical analysis, come check out our chat. I'll post the link at the end of the video, or on the, on YouTube. Okay, thank you.